Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Just want to thank everyone for coming to the live stream yesterday. Unfortunately, YouTube lost the first hour of the broadcast. It did not process properly, and there was a glitch. We can't even use the editor on the videos. Unfortunately, we lost some great content. As we look at yesterday's action, we continue to see this grinding action, and the markets just move above the 3,300 level again after trading in a lackluster session early in the morning as we moved up into the close to the 3,306 level. We're continuing to grind higher. I know on Monday I said this was going to be a sloppy week. So far it hasn't been sloppy, but it's been a steady grind, and the volatility continues to contract. While the market's going to move higher, there continues to be a lack of momentum, which is concerning. It does suggest there's a likely turnaround in the market coming, but it doesn't appear that it's going to happen for several more days. I'll go through that in the technical section here in a few minutes. As we look to today, we have the ADP employment numbers coming out. They're expected to show 1.88 million new jobs. Usually the ADP report doesn't mean much, but there's not going to be anything else really for the markets to key off of. There's some ISM manufacturing numbers coming out, but nothing really material. Everybody is going to be focused on Thursday's unemployment claims and the continuing claims, which I've been talking to you about. This is a more accurate and update report, giving us an idea of what's really going on out there. Also, folks are looking forward to those Friday numbers with the unemployment expected to show 2 million new jobs and a downtick to 10.5% unemployment. Don't be surprised if that number comes in better than expected. I've been discussing this for the past 6 weeks, is that all of the Q2 numbers continue to come in better than expected. Perfect example was the factory orders yesterday, up 6.7%. Better than expected. So the market sentiment is being affected by these reports. I continue to believe as we start to see metrics come in from July and August, and as we go through September, as we come into October, just prior to the elections, that will give us a better feel for what's going on in the economy. And I expect it to be a very mixed picture compared to Q2, which was the big rebound after the shutdown. The last big item that's happening today is there's 447 earnings reports coming out, and they're all over the place, but there seems to be a focus on financial, energy, basic materials, and healthcare. So there's going to be a lot of impact just from a sentiment standpoint on how these numbers come out. Once again, these numbers are coming out of Q2. On balance, these are mostly going to show a better than expected number. And this is just the way market sentiment is being formed right now. As we come into the middle of the week, expect these markets to continue to be in a stable pattern as we go forward with volatility remaining low. Let's take a look at the charts and see what they're telling us for Wednesday. Beginning with the WaveTech database, there's very little movement overnight. We didn't see a lot of selling, but we did see 400 more sells, but we also saw 200 buys. So there's a slight negative rotation going on from the standpoint of the database. We continue to be at 76.14% bullish. As I've been discussing over the past several sessions, I still expect to see the database continue to sell out of these positions that have been in since March. If the market continues to move above this 3,300 level, there may be a several day delay before we see more selling. Beginning with the S&P 500 futures, we're seeing a move above 3,300. Futures are currently trading at 33.06. The high so far tonight's been 33.07. We're continuing to see this steady move up. As I mentioned in the opening comments, there's still a lack of momentum, although PPM2 is ticked up just slightly, so we're starting to build some potential acceleration to the upside. The key support is at the 3266 level with it, which is S3 on the market grid. For today's action, I'm expecting to see the possibility of going between the R1, R2 number and printing up to that 3322 level. I'm not sure we're going to see on the downside the 3289, which is S1. So far, we've been very firm, somewhat quiet overnight. We've seen about 73,000 contracts. We're about 30,000 shy of where we were just about a week ago. And one of the things that I'm continuing to see, and I mentioned this several days ago, that there's a normalization of the markets. The daily ranges have been contracting into almost a normal range. Prior to the COVID decline and the recovery, the daily range on the S&P was on average about 14 handles. So we're trading in a very narrow range relative to that extreme volatility that we saw earlier in March, April, and May. The configuration continues to grind in this range in an upward slope. The PPMs are in the trend maintenance mode. They're going sideways. There was some weakness a few days ago. It looked like we were going to try to do a mini rollover. That didn't happen as the markets continue to hold their support levels. This appears that this pattern will continue. Going to the cash S&P, this contraction of the range is very obvious. As we look at the daily range that on the cash S&P, it's at about 30 handles right now from the standpoint of what we've seen over the past 3 days. RXT today at 33.36. I talked about this on Monday. My expectation is that we would see a 33.14, 33.34. These numbers get refined as the days go on. Now we're looking at 33.13 and the 33.36 level on the upside as this range. And this market grid is going to continue to be upward sloping as long as we can close positive on each day, and we don't have to close positive by a lot. Looking at the NASDAQ futures have continued to just etch out just slightly higher highs every day. The momentum has actually ticked up and we're back into trend mode on the NASDAQ. And I've discussed this over the past several sessions as the NASDAQ continues to lead the way from a momentum standpoint. PPM1 is at 0.28, PPM2 0.26, and PPM3 0.28. So it's a very steady trend for the most part in that sideways range that I talk about on the PPMs, maintaining this trend. There doesn't seem to be anything going to disrupt that, especially with the expectation and the news backdrop that we have with all the earnings reports and most folks being focused on that employment number to come out on Friday. The weekly grid gives us a much better view of the NASDAQ and what to expect. We have seen a 11,109. R1 is 11,047. R2 is 11,223. We are likely to move toward that R2 number as we go through this week. I don't think we'll get to an R3, which is 11,398. On the downside this week, we saw 10,876, and we came short of S1, which was 10,733. Unless the news that we're about to get on Thursday and Friday is drastically different than what everyone's expecting, then we're probably going to see this market continue to move toward the higher end of the grid for this week. The next market we'll look at is gold. It's still in a runaway. We're now printing 2042. There's nothing, doesn't appear nothing's going to stop this. We managed to close right at the extreme grid yesterday. We did not get a grid sell signal. This market is accelerating sharply. Tonight I'm going to cover gold and silver. I'm not going to cover the dollar. Pattern that's unfolding on a weekly basis is very robust. When we look at the daily chart on gold, we stayed in that sideways range for about 4 or 5 days with that slight upward bias, and now we're pushing up and pushing the grid higher. We're seeing acceleration on a short-term basis, which is very positive. Weekly numbers are very robust, but so are the daily numbers. PPM1 0.76, that's price pressure momentum, tells us the angle of attack of the 10-period moving average is 0.76, PPM2 0.52, PPM3 0.41. I've been talking about the key support now is 1966 to 1944. Those numbers aren't even in play right now. On a shorter term basis, you have to look at the grid for today, which S1 is 2011. That's going to be your support. I doubt very much we're going to get below that level. If we did, then 2000 even will be major support. R1 is 2030, R2 2041. We've already exceeded that. And the next level, R3, is 2052, 2062. So this market is just in a sharp acceleration, and there's not much to get in its way since we're at all-time new highs. GLD, this might give us a better view of that all-time high. Yeah, it does. The old high was 185.85 back on 2011. We printed today 190.72. So this is an all-time high on gold. We're seeing similar numbers, as it should, as the PPMs are all at extreme levels. This is a monthly graph, so you'll see this extreme here. The monthly grid on GLD, R2 is 191, the high's been 189.60, so we're getting up around R2. So R2, R3, just like in the gold, is going to be the high end of this market. Just looking at the last buy signal we had in the GLD on a monthly basis was back at 121. If we go back to a weekly, at 122.97 on 3/15/19, and I've talked about this before. I discussed it in the review I did on the live stream yesterday. As I've been very bullish on gold for a while. This is a long-term trend that has formed. We now have all-time new highs, and there's a lot of objectives I have covered over the past several days that it's likely we could see 22 to 2400 on gold in this particular sequence at this time. Looking at the silver market, this is the weekly chart on silver. RXT is 2709. Right now the high's been 2645. R3 number's 2641. The high's 2654. So we're trading just above that number. The extreme is 27.09. To figure out where the downside risk is on this thing turning around, we'll go to the daily patterns. It's interesting, in spite of this move higher, PPM1 is actually starting to lose a lot of momentum. A bit concerning, even though we're trading at a new high on this run, we're starting to see some momentum deterioration, but I don't think it's significant at all. We're likely to see it move toward that RXT number on a weekly basis. This move is played out, but there's still some upside. It will be about the close on Friday, so I'll continue to keep these metals in focus as we go forward. This will complete the video tonight. Thanks for watching. Thanks for coming to the live stream. Great fun. Remember, we have the WaveTech training on Wednesday. Thanks for watching.